started my career 10 years at Citibank. I was their international tax counsel, so I know a little bit about banks. They have their problems, and I'm not saying that their hands are always entirely clean, but things like that do happen. I do think that a lot of analysts make too much of it. It's okay. They got some inventory wrong. They admitted it. They recounted it. They restated. I mean, what would be the purpose of doing that? I mean, what's the backstory there? I don't think there's much to it. The other thing I would observe is that there are a lot of analysts who are out there, and they're always looking at the inventories in the vaults, and that information is available. There are only certain vaults that are designated, good delivery vaults, or part of the good delivery system by the LBMA. We know who they are. They do have to file reports. There are regulators, whether it's the COMEX or financial regulators in the UK. So that information is out there, and people look at these inventories and they compare them to open interest and futures contracts or other contracts, and they go, "Oh, there's not enough precious metals to deliver on all these contracts." Well, first of all, that's always true. The paper open interest, if you count futures and over-the-counter derivatives and other contracts, option contracts, et cetera, is always a high multiple of the physical inventory, and that's because it's not supposed to settle. And Blythe Masters said that years ago. I had the quote, I preserved it, but then I could never find it again. I saved it, but she was giving an interview, and I sometimes people who are highly knowledgeable, they don't want to say everything they know, but they let slip. And she said, gold never settles. And she was right, because if it ever did settle physical for paper, it wouldn't work. But if you read these contracts, there are always termination clauses, force majeure clauses. Read the rule book of the COMEX. It says in the rule book, we are not a source of supply. It says that. They also have another rule saying they can change the rules. So, and it says that we can change the rules. They have a board meeting, have an emergency, what we call disorderly markets, and they can change the rules. So they're prepared for this. They know it. Market professionals know it. So I never read too much into these inventory counts, and because of course they're low, and they can always get more gold and silver if they need it. If it's, I always say, if you have, as a philosophical or logical principle called Occam's razor, it says if you're trying to solve a difficult problem and you have a simple explanation and a really complicated explanation, always go with the simple explanation. Just probabilistically, it's much more likely to be the right answer. So, I mean, if this was a part of some deep dark conspiracy, where's the rest of the conspiracy? I mean, you can infer it. Well, I wouldn't even say infer it. You can make it up, but it doesn't hang together. And again, so is there ever a good time to make a high profile accounting error? Probably not. There's probably always something going on, and you can link it to serious fundamental things afoot in the precious metals markets. I don't doubt that for a second. I've been one of the ones, longest and most adamantly saying that gold prices are going to go a lot higher. Silver is going to go higher with it. Silver is a different analysis because it's an industrial metal as well as a precious metal. It's not a pure play. Gold is much more of a pure play. Gold's not really good for anything except money. So they'll go up together, and so it does go on. There are backstories. There are some really major fundamental things going on. I'm not saying that's not happening, but I wouldn't put too much weight on one like little accounting error. Their decision cycles are 2 years or longer. Everybody said, well, we're thinking about it. Well, that's fine. Why don't you actually do it? And they don't. They will do it, by the way. Pension funds will get into gold when it's like $4,000 an ounce on its way to $5,000 an ounce, when they've missed a lot of the initial gains, a lot of the initial moves, when they kind of missed the boat, notwithstanding people like myself and your prior guests telling them to get on board. Then they'll do it when it's almost, it won't be over, but they'll miss the missing initial surge. That's just the way they operate. But it doesn't matter because if you look at just the fundamental facts, global mining output is flat. It's not zero. I'm not talking about peak gold. Actually, maybe gold is getting harder and harder to find. But I always I'm somewhat critical of a lot of analysts, particularly people in Washington, but New York, but elsewhere. They don't get away from their desks. I mean, they just sit at their desks. I'm at my desk now, but that's okay. But they just stare at the screens all day, and they know what everybody else knows. Well, I travel around the world. I visited the biggest refiner in Switzerland, on site. The second biggest refiner in Australia, on site. I've been 1,000 feet down in a gold mine not long ago out in Utah on site, with a helmet and headlamp and the whole thing. I talk to dealers all the time, like real physical dealers who, are working orders, etc. So I'm kind of out there hands-on with the industry from mining, mills, refining, dealing, etc. And I can tell you, gold is in short supply. They can't get it. Global mining output is about flat, has been flat for 5 years. It's not declining rapidly, but it's not growing, even though the price is going up. So obviously margins are going up. Miners are making very good money. Individuals are buying it. I mentioned miners, refiners, dealers, etc. I've also met with the head of logistics for one of the world's largest private vault operators. Here we are in May 2021. We have not gained 2019 levels of output. Now, we've had growth, we had very sharp growth in the third quarter of 2020. It really tailed off a lot in the fourth quarter, partly because there was a third wave of the pandemic. First quarter was a disappointment. Second quarter, we're in it now. It remains to be seen. I'm not saying there's no growth, but I'm saying we're still not back to 2019. So where's the boom? Where's the V? So it's not there. Initial claims for unemployment are to a post-pandemic low, okay, but they're still double the pre-pandemic numbers. In other words, 200,000 claims used to be a high number. Now it's 400,000 claims and everyone's opening the champagne corks. It's like, no, they're still double what they were before the pandemic. It's lower. Yeah, okay, the trend's going in the right direction, but that's still a high number. That don't even, you can have the unemployment numbers don't tell you very much because they ignore labor force participation. They ignore 10 million Americans, able-bodied Americans between the ages of 25 and 54 who are not working, but they're not counted as unemployed because they're not looking for jobs. I make the point, if you're a bartender, why look for a job if all the bars are closed? Some of these things are improving. I'm not saying there's no growth. I'm just saying this is nowhere near what you would expect given the severity of the crash in 2020. Interest rates will be zero, until further notice, maybe 2 years, 3 years or longer. They're buying assets, they're expanding the balance sheet. It has no impact because they buy assets from the banks with money that comes out of thin air, and then the banks take the money and give it back to the Fed as excess reserves. What does that do for the economy? It doesn't get lent, it doesn't get spent. There's no velocity associated with it. There is no monetary stimulus. So the Fed, now they put on a good pretense. Jay Powell's a smart guy, he's a lawyer, puts on a good show. My favorite is Mario Draghi. Nobody puts on a better show than Mario Draghi. There's only one central banker in the world who actually knows what she's doing. That's Elvira Nabiullina, who's the head of the Central Bank of Russia. She knows what she's doing, and she's taken gold as a percentage of total reserves up to 20%. 20% of Russia's reserves are now in physical bullion, thanks to her. So she knows what she's doing, but the rest of the people never knew what she was doing, still doesn't. Powell's a little smarter, but they can't do anything. They can't cut rates. They're not going negative, and they can buy all the assets they want, but no one's using the money. So what good is that?